The Mullen Automotive story just took another strange turn. And if you thought it couldn't get any worse, well, buckle up. Because as of July 28th, Mullen Automotive is officially changing its name to Bollinger Innovations Incorporated, and the stock ticker will become BINI. But there's something deeply suspicious going on here, and it's not just the name. There are no corresponding SEC filings under the current MULN ticker, and nothing filed under BINI either. The only mention of this rebrand is buried in a company-controlled press release on their website. And to make things even sketchier, this announcement comes right in the middle of a reverse stock split proposal that we haven't heard anything about since July 8th. This isn't about repositioning the brand. It's starting to look like an orchestrated move to bury bad news, to distract shareholders from the collapse in value, the toxic financing, and the threat of delisting that's now just around the corner. Let's break it down. On July 8th, Mullen filed Form 14A with the SEC. That filing asked shareholders to vote on two things. First, to approve another reverse stock split, giving the company permission to split the shares by up to a 1-for-100 ratio. Second, to approve the issuance of more convertible notes and warrants, the kind of toxic financing that has already destroyed shareholder value in the past. Since that filing, the stock has plummeted again. As of July 24th, MULN closed at just 6.4 cents. According to some data aggregators, the market cap is now below $1 million, a level you'd expect from a bankrupt OTC shell company, not a so-called electric vehicle manufacturer. But instead of addressing the results of that vote, instead of releasing a Form 8K or even a basic press update, Mullen has gone silent. There's been no update at all on whether the reverse split was approved. No explanation of what's coming next. No timeline. Nothing. And then, out of nowhere, we get this sudden announcement. Mullen is changing its name to Bollinger Innovations and switching its ticker to BINI, effective July 28th. That's just days away. The change was rushed through, announced with almost no fanfare, and again, not filed properly with the SEC. The company's website is the only place where this announcement lives. No 8K. No 8A. No official filing. And it gets even more troubling when you look at the timing. You see, Mullen has until August 26 to regain compliance with Nasdaq's $35 million minimum market cap rule. To do that, they need to maintain a market cap of $35 million or more for 10 consecutive trading days. If they don't, they'll be delisted from the Nasdaq entirely. So, what better way to manipulate public perception than to rebrand the company, switch the ticker symbol, and make everyone think something new and exciting is happening? But here's the truth, it's the same company. Same debts. Same toxic funding deals. Same management. Same problems. Except now, there's less transparency than ever before. They're changing the name. They're changing the ticker. And yet, they're not changing the behavior that got them here in the first place. And let's not forget, this isn't their first reverse split. Mullen has already executed multiple reverse splits in the past year alone. Each one has diluted shareholders even further and cratered the stock price again and again. This is a company that's shown time and time again that it will do whatever it takes to stay listed, even if it means constantly changing the rules, hiding behind PR statements, and avoiding full disclosure. And now, they may be using the ticker change itself as a cover for a new reverse split. If they announce the reverse split during the transition, or immediately after, it'll be much harder for retail investors to track what's actually happening. You'll search for MULN and find nothing. You'll see BINI and think it's a brand new company. But it's not. It's Mullen, with a new label slapped on top. And here's the kicker, even if the reverse split goes through, it won't fix the core issue, the company's market cap. If the stock doesn't surge and hold above key levels, the reverse split will just be a temporary band-aid. It won't attract long-term investors. It won't rebuild trust. It won't fix the fundamentals. So let's recap. Mullen stock is trading at 6 cents. Its market cap is under $1 million, according to some sources. It's facing a Nasdaq delisting in just over a month. There's been no SEC filing confirming the outcome of the reverse split vote. And now, out of nowhere, the company is rushing to change its name and ticker, with no official disclosure or supporting filings. If you're not skeptical, you should be. Because this feels less like a turnaround and more like a disappearing act. New name. New ticker. Same story. And investors are paying the price, again.